Hello and welcome to our July 2018 edition of International Tax Newsletter. Let's start with the Americas. 6 months in the U.S. in the tax reform, we've attached in this edition three webcasts, a link to one on the general provisions, one on the global intangible low tax income provision, and one on foreign businesses doing business in the U.S. You know, when we talk about digital, we typically think of the debate in the European Union between the OECD and the Commission's proposal, but interestingly, Uruguay has proposed a withholding on digital services effective July 1 of this year. Moving to Asia, in China, as you may know, there is a preferential rate of 15% instead of the normal rate of 25% for qualified technology advanced services enterprises doing business in 15 pilot areas. That rule applied for calendar 16 and calendar 17. A new circular extends that treatment to 2018 and future years. In New Zealand, I won't go into all the details, but huge changes there. And so if you're doing business in New Zealand, go back and take a look at all of the changes that are described. Lastly, within the European Union, as you know, the Anti-Tax Avoidance Directive 1 is supposed to come in place January 1st of 19. 5 basic proposals: interest limitation, CFC rules, exit taxation, GAR rules, and intra-EU hybrid rules. In this edition, we cover proposals in 2 countries, in Luxembourg and in Denmark. Some of them are worthy of a look because they could be huge changes. So, for example, just to highlight one, in Denmark, the normal interest limitation rules today are 80% of EBIT. That goes to a 30% of EBITDA, which is kind of a more normal rule that we see. European Court of Justice decision and Fidelity Funds. I think this is interesting. It says that a Danish company can't withhold on payments to a non-resident investment company if in fact there is no withholding on payment to a Danish fund. So I think there may be a broader opportunity for a refund here, not just for Danish companies, but perhaps for companies in other EU states, and so that's worthy of a look. Lastly, just to round this out, the press release was issued by the European Commission in the GDF Suez or ANGI case. This is not so much a transfer pricing case, but more of a financing case, saying that if the Lux government granted a tax ruling saying you get a deduction for the financing costs, but there is no corresponding pickup, then it runs afoul of the European state aid rules. I think I'll leave it at that and let you peruse the rest of the content. And until next month, happy reading.